The second one you kind of alluded to a little bit earlier when you were talking about where public cloud is now, and that company is ServiceNow. And then, I would want to hear a little bit of maybe your thesis on public cloud, what you like in particular about ServiceNow. But one of the questions I also want to ask is ServiceNow is a really interesting example of a company that has been compounding for a very long time already. And so people could maybe look at it cynically and just say, well, is the compounding already behind us? How much compounding is left in the future? Maybe if you could start there and then kind of work into more about ServiceNow and why it's interesting.
So ServiceNow, they are not the cutting edge cloud computing company. Clearly that's, AWS plus Datadog plus Snowflake plus, you've got your data, warehouse plus your analytics platform plus your storage and web. ServiceNow is different because they were call it the first truly cloud-based ERP. And if you went back into the history of enterprise resource planning, most of the companies got built around which executive they were serving. So Workday was serving your CHRO, Salesforce was serving your chief revenue officer, your head of sales, and ServiceNow, because they didn't grow up in the legacy, they kind of got to start in the cloud ERP world, served the CIO. And the rise of the chief information officer or information systems, however you like to think about it, is potentially the most impactful position to serve because they are the biggest budget spender on software infrastructure decisions for the company. So, the CFO was always a tricky one because, there were plenty of the CFO always needed, all the financial ERP software in order to get their monthly financial support of financials done on time. But that was actually a little bit more of a competitive market than what ServiceNow has been able to carve out with the CIOs. So one of the things that we really like about ServiceNow is that it has owned this, call it pivotal executive position within so many different types of companies. And what they build is actually pretty customized into any given company that they're working for. And because you get that added layer of customization, it's a little bit more expensive up front, but it usually turns into a longer customer lifecycle time. And so we view ServiceNow, the US government happens to be one of their very large customers, but they have nearly government-like contracts with the biggest companies in the world. And when you ask the question about, well, how can you be excited about the future compounding of this business given the amount of growth they've had so far? Growth from existing customers. That is when a business that size generates so much growth from its existing customers, like it has done for so long, that is typically an indicator that company will continue to surprise investors on the amount of incremental business that is going to do going forward because they aren't having to find new customers to do it. They're simply having to penetrate their existing customers more deeply with more products and services. And they haven't even done much M&A to chase that. That's what investors give them a hard time for. They say, you're not going to get to Salesforce because you haven't done the acquisitions. And management team keeps pushing back and saying, well, let's see how far we can take this because we have so far defied all of your expectations without having to do all of this bolt-on M&A. So bolt-on M&A is, as we see it, is simply an opportunity for a company like that, should they see the need for it in the future. But you've got to be impressed with the amount of organic growth that a company like that has done.